And welcome on stage Dovile Silenskyte from WisdomTree, who leads digital asset research. Krisan Haria, portfolio manager at 21 Shares, responsible for all of the crypto ETP range and leading all the key functions around custody, staking, and portfolio management. Misha Putiatin, the co-founder of Symbiotic, a universal staking protocol redefining how blockchain networks secure themselves. And finally, Jean-Jacques Barberis, who is the deputy CEO at Amundi Asset Management and also the chairman of Amundi Germany and CPR Asset Management. Thank you very much for being here, and I will let you, Will, lead the conversation. Thank you.
Thank you. Welcome, and thank you for coming. Good morning. The topic of this panel is tokenized funds and ETPs and what benefits they bring investors. As digital assets evolve, it's becoming clear that tokenized funds is emerging as the bridge between traditional finance and blockchain-based markets, combining the familiar investment structures and the potential benefits of tokenized assets. But what benefits do they actually bring? Do they offer investors better access, liquidity, efficiency? And what new risks and trade-offs do they represent for investors? So we're gathered today, the panel of industry experts, to discuss this topic, to see how these funds are currently being built, what added benefits they bring, and what it means for future of investing. Now, the panel here to set the stage, perhaps we can first talk about what tokenized funds we mean and some of the current examples. And Dovile, perhaps we can start with you. WisdomTree has been a pioneer in the space, launching a tokenized money market fund back in 2023. How do you guys look at and think about and approach tokenized funds?
Great question. So just by way of introduction, I'm Dovile Silenskyte, and I work for a company that has very big focus on tokenized funds in the US. There we have 18 different funds that are tokenized on 8 different blockchains. And what we see is, we see the evolution that's going to happen in the same manner as the evolution that we saw over the past few years. When ETFs became the investment standard, tokenized funds will be the investment standard of the future. And of course, now everybody is building to that stage, but this is where the world is going. So we as a company are doing everything we can to be at the forefront of this evolution.
Thank you. And maybe Jean-Jacques, Amundi, as the largest European asset manager, a lot of people look towards you. Can you tell us a bit about your recent advances in this space?
Yes, thank you very much. Thanks a lot for having me. And I do not pretend to be an expert on these subjects. I'm making my education at the moment. So for those that do not know Amundi, so we are the largest asset manager in the world that is not American, which is a good way to define us. Disclaimer, Amundi has not been interested, and personally I'm not interested in crypto assets per se. What we're interested in is in the underlying technology, and indeed how it's going, I would say, to change the way we work going forward. So that's where our focus is. In particular. Therefore, what I believe at the moment on these questions, and the overall question of the panel, and we were sharing that just before, it's for me we're exactly at the same moment as we were in the 80s when we come from physical securities to, I would say, securities on IT systems, except now the move is on digitalization. And for me, it's exactly the same type of moment we're living. So what we do, or what we try to do, being modest about it, first we tokenized our first money market fund, I would say on the 4th of November, just to test it, I would say, have the capacity, organize it. And now we're entering into a moment where we're making different types of experimentations / go-to-client approaches. So with our good friends of Kaiko, who must be around in the room, we launched 10 days ago a new product that has been tokenized by them on their platform, and that is distributed by them. And we're entering into a moment as well where in April we're going to tokenize additional share classes of other of our money market funds vis-a-vis corporates, particularly in Asia, that are interested to invest into it. So we've really started by focusing, I would say, on tokenizing share classes of short-term type of funds and instruments, and we will see how we go forward going forward.
Very exciting. I mean, this is, all the panels are set up to capture what's currently going on. It's really excited to all the work that you guys are doing. Then to you, Krisan, 21 Shares. 21 Shares has been an innovator in the crypto investment space with products both in here in Europe and also in the US. What kind of opportunities are you guys seeing in the tokenized fund space?
Thanks for that. So right now, from a tokenized perspective, the market still is, shall we say, not quite there for full adoption. From our clients, we have a wide variety of clients who are pretty much across the whole spectrum, from those who are just dipping their toes, so to speak, into, shall we say, the crypto landscape, to those who are far more experienced and are well nuanced in all the complexities of any kind of blockchain. From a tokenized perspective, it's definitely going to be the future. The benefits of it are, you know, many, shall we say, in terms of real-time settlement, atomic settlement, in terms of from compliance, a KYC point of view. That's the future. There can be no doubt about it, and it's just a question of how quickly across the board this can be adopted. We were just discussing this just before we entered the room. There's still a number of intricacies of general inertia, general case of, shall we say, systems within banks, etc., which makes quick adoption difficult. If you're starting from ground zero, this is definitely the way forward. We're not starting from ground zero. We have numerous systems, numerous antiquated systems, which makes it very difficult to do, shall we say, adopt this in a very speedy and a very quick format. In terms of timelines, I think it depends upon country on country, depends upon regulators, depends upon compliance. But if you're asking me within 10 to 20 years' time, tokenized funds will be more, shall we say, above 50% than where we're at the moment on that side.
Thanks for that. And to what you're saying, the flip side of benefits, we'll talk a little bit more about it, are the challenges. It's the hurdles, not just for the funds, the product themselves, but for issuers. But before that, Misha, welcome. And you are, I believe, the outlier of this panel. You're not from asset manager. So tell us a bit about what Symbiotic is doing in this space.
Yeah, well, we're a platform. Basically, what we do is, in a widest sense, we are collateral markets. So everything that requires collateral, like, can be performed and can be made productive through our platform. So how we look at the RWAs and tokenized funds in general is that, like, I agree with the comparison that it's kind of when, like, finance entered the digital age. But a lot of efforts that we see right now are more in a way of, like, yeah, we now have, like, computers. So we are gonna just store scans and fax images from, like, our documents and call it digitalization, right? Like, we don't want blockchains to become just an accounting unit, because that's not, like, it's a great strength and, like, great improvement for the traditional finance, but, like, it doesn't actually, like, unlock the entire usefulness of blockchains, because composability, programmability, and other things that are way harder to implement than actually, like, moving stuff on chain. It's an unsolved question, and through our applications that we launched, we are trying to kind of make it easier for traditional finance to be onboarded in a way that's composable, that actually unlocks the benefits of blockchain. So from the, first of all, like, what is smart contracts, right? Like, most people in traditional finance don't understand that. And moreover, they don't understand the risks of it. Like, how do you price it? Like, I have, like, a yield of 10%, but, like, what is actually the risk profile of this? Right, like, what if it gets hacked? What if, like, the logic is not, the math is not, that does not check out? How do I check it? How do I ensure it? So through Nexus Mutual and other partners, we are doing, like, we're trying to make insurance available to, like, funds. Through, like, the other part, right? Like, how do we make it liquid? Like, how do you make sure that, like, because crypto audience and generally, like, what crypto tries to do is to make everything, like, really quick, right? Like, so net asset value is updated, like, every 10 seconds. Like, liquidity is available 24/7. You can, like, withdraw in, well, one block, so, like, 12 seconds, right? Which is, like, really hard to do. So what we're trying to do is to, like, help funds to integrate in a way that's can be interactive with the other parts of blockchain industry. So it can be used in DeFi because it can be liquidated immediately. It can update the update performance with the cadence that's acceptable to people. Because, right, like if you're using RWAs or tokenized funds in lending markets, you kind of need to know if the net asset goal. You need more granularity because people are actually like, you have like 25 protocols built on top of it, right? So you have the base layer, that's tokenized fund. And you have like lending market, stable coin, like something prediction market. And it's like a huge like player pie that actually, like if you update net asset value like once per month, it's not gonna work, right? So like that's the role that we take upon ourselves to help like to build like a suite of protocols and help build them and launch them to actually make traditional finance native to our parts of the woods.
No, thanks for that. And from what I hear, you're partially building solutions, but also educating, making sure people know the risks and so forth. It's not just, you know, blockchain, everything's good. And maybe this leads to, we can talk about a bit of the challenges. And I think Dovile and I shared with her at least when I was, before Kaiko, I had my own small ETF startup. We try to launch 1 or 2 funds and personally experience how difficult it is. It doesn't matter if it's crypto or not, we cannot build investment products no matter how good you think they are by themselves. Like distribution is paramount. So question to Dovile for WisdomTree, how do you guys think about distribution and approach?
Distribution is absolutely key. So now everybody's talking about tokenizing funds, launching new funds, without even thinking how they are going to attract the user base. And within WisdomTree, what we've done is we have built out 2 apps. One is WisdomTree Prime, targeting US retail. The other is WisdomTree Connect, targeting institutional clients. Those are institutional clients who are native on-chain. So for example, there are treasuries that are managed on-chain. There are stablecoin issuers who want this type of service. But for retail app, and I can't wait for it to come to Europe, hopefully that will happen someday, what we offer there is for investors or for individuals, any retail individual, to have a same account for investing, spending, and saving. So for example, if you have 10 euros, and you put those 10 euros in that account, they can be invested in, for example, tokenized fund, tokenized treasuries, tokenized equities, tokenized commodities. We have 18 different exposures. But even though those 10 euros that you've saved and 10 euros that you have invested, the ones that are now earning you hopefully return, you can still use the same account for paying your daily expenses. So you can go and buy coffee, for example, without needing to worry about needing to uninvest and move that money into a separate account that you would use for daily spending. So this is efficiency that we have built out because we see demand for this type of solution. Because most people otherwise, they would see no value for going into tokenized funds. So there needs to be something beyond what traditional investment products already provide them.
Thank you for that, Dovile. And perhaps we move to Jean-Jacques. You recently had some successful product launches, and maybe you can share some thoughts on the internal. Amundi is large. You must have internal coordination and alignment. How does that process look like from your side?
Just one step back. I think what is important to understand is that at the moment we do not launch new funds. We do replicate existing ones that may be relatively large animals. The first one we did was a 5 billion money market fund, and the next one are going to be even bigger under, I would say, a blockchain format. So that's a little difference, and that's a little the nuance. And I will come back to Misha's point, I think, later on the fact that indeed the key challenge afterwards is, I would say, the on-chain access of the underlyings on the funds, which is the condition to go fully on-chain at some point in time, which is not what everybody's doing, I think, at the moment. To come back on your question on how do we do that, I would say also internally. And here I think it's interesting to come back a little bit to what are the specificities of what is money. At school you learn that it's liquidity, stability, and acceptability. These are the three big conditions around what makes money and what are the characteristics of it. And I think that's a lot the work that we're doing at the moment, which is making, I would say, this all new going on-chain vision being acceptable and understood. So the way we do it, first we have the privilege of being part of a large group, a Crédit Agricole group, which means that we have our cousin, our custodian at home, which is great, because it means that we have the capacity to co-build with them, because a large part of the job is done by these guys with KCAs, the types, I would say, of approach we want to develop. So that's the first thing we do. The second thing is that it starts by also, I would say, the top management, going into education. And honestly, this is difficult because a lot of these questions are a lot post-market specialist related. And everybody is not a post-market specialist in the asset management industry. So you need to go back a little to school there and to re-explain how it works and what is being changed there. And the last thing, the way we try to do it, is really to make some experiments. So really trying, that's why we successfully launched that partnership with Kaiko, for instance, trying to test different things and learning progressively and going at scale progressively. And I think, therefore, we build up also that acceptability, taking it, I would say, very seriously, which a relatively large amount of resources that are, I would say, given to that overall within the group. And finally, I think what makes us move at the moment is really a direction from top. And so the fact that the new CEO of Crédit Agricole in the new middle-term plan of the group announced that, for instance, digital assets under custody one of the objectives of the plan, per se, was a very strong signal for the whole organization and all the entities of the group to move forward. And that's what makes us, I would say, passing steps after steps, even launching our own euro stablecoin, as it has been leaked in the press last week.
No, thanks for that. It's not easy to do things and move inertia in a TradFi world. So I'm pretty excited Amundi is moving forward in this direction. Then, Krisan, 21 shares. You guys have been innovating in the space, and you have capabilities both in crypto assets, in crypto infrastructure. What do you guys see, and what's the vision at 21 shares in terms of tokenized funds?
So, as you said correctly, 21 shares, we are an innovator. We did launch one of the first crypto ETPs out there in 2018 on the top 5 crypto coins. So in terms of what we're seeing or where the market's going, I think across the globe it's quite different, comparing, shall we say, emerging markets to a developed world. Stablecoin growth is definitely a big one at the moment, especially from an EM perspective. Doing any kind of transfer from stablecoin, it's almost instantaneous. You use fiat, could take you a couple of days before anything gets done. And from an EM perspective, that's a massive difference. In Brazil, crypto and stablecoin knowledge, it's on a different level to where it is in, shall we say, Europe, and also from a US perspective. In terms of growth and in terms of the, shall we say, tokenized world, I think that's definitely moving on. We're seeing more and more trading being undertaken during weekends. Now we're seeing, especially from Hyperliquid, etc., and we're seeing more companies now offering this kind of trading perspective. In terms of tokenization, I think, allied to what you just mentioned, there's almost 2 versions of tokenized, shall we say, assets. One is whereby the underlying isn't necessarily tokenized, or shall we say as a digital asset, but you wrap that as a digital token. To me, that's not fully tokenized, and this may be controversial view. I think we need to go into the world where the actual initial asset is a tokenized, shall we say, security. I.e., if a company wants to issue debt, that's tokenized. If they want to issue stock, that's tokenized. Even if it comes in terms of, shall we say, a coupon or if a dividend payment, that's all tokenized. It comes down to stablecoin offering or some variation on that. At the moment, we seem to have, shall we say, a mixture of everything and not really a solution of anything. I.e., you can have, shall we say, some tokenized version which trades on Robinhood, some tokenized version that trades on Coinbase. They're not fungible, and liquidity also gets, shall we say, split up. So these are some of the challenges which, shall we say, also goes back to the previous point. Why isn't it moving quicker? It's many of these kind of, shall we say, intricacies or nuances which almost prevent us moving in the speed that we want to go.
Go ahead, Misha.
Yeah, no, like I found something funny, really funny here. I just like got a picture of the future balance sheet of a company, right? Like it's a tire selling company. So they have like account receivable that's tokenized. They have inventory that's tokenized, of course, because we have digital twins, and they have like investments that are tokenized. So like a big four. It's not going to be in a great spot, right? Because like nobody needs audits anymore because everything is tokenized, and you kind of have your balance sheet like ready at the moment, and 1 minute notice every time. Basically, like everything is trackable, everything is tokenized, everything is priced in already. So that would be an interesting future to live in.
So we definitely discussed a lot of challenges in adoption, in the technology, and the nuances. Then to the topic of this panel, let's talk about benefits. Maybe back to you, Misha. What do you see as the major benefits in terms of tokenized funds and tokenized ETPs and so forth?
Well, like if they done correctly, that's like, I would say transparency. Because like financial products, especially the complex one, they get like funky at some point. Right, because like you have like 25 layers of that, and like maybe 5 or 7 participants that actually structure this. Like you have like a deploying entity, you have like a bank that converts it and like or issues a credit or like letters or something. So yeah, transparency if done correctly. We can build really complex products that you can decompose and kind of see the algorithm of it. Not going through like million pages of agreements. People say 24/7 trading, which yeah, I think will enable a lot. But like it hugely depends. If you take like a really liquid money market fund and bring it to on chain, I don't think there is a huge benefit to that. It's great still, but like it's not revolutionary. But if you take like ILS funds or something that was like more closed off, right? Like where you actually need to like fly to Bermuda or some other islands and like talk to people and go on the phone call or something, right? Like where you have like a minimal check of like $5-10 million just to like participate, right? So you have like payment periods that are like 18 months long. Or we have like products that are quite old school even for traditional finance, right? So in their way, moving to crypto rails, moving to stuff that's liquid within minutes and like can distribute dividends or like some other performance results within like minutes as well. Right, and like by basically unlocking it and creating a structure where people around the world can access that, where neobanks can access that as a yield source for the clients, right? That would be a huge unlock, right? Because generally, I think like NYSE is okay, right? Like it's quite liquid and it works really well and it's fast and I actually like we have a good infrastructure on traditional finance. Let's not think that like they are in the stone age somewhere, right? In terms of like high frequency, like crypto is not in like a few years at least will be near like what we have in classical finance, right? Like we are moving at a snail's pace compared to that. So it's not like 100% like, yeah, we're gonna improve. But I think there are like things in trade finance, in factoring, and other like parts of the woods that like will be enormously beneficial to the traditional finance.
No, that definitely makes sense. And here I see, Jean-Jacques, you've been taking a lot of notes. So to you, if you can share your thoughts.
Again, I'm here to get educated, so that's, I'm a little scholar there. Coming back at the phone, sorry, I'm going to be 1 second the boomer in the room to challenge a little bit a number of things that have been said, because I think at the moment, first, if I look at the demand for these type of products, apart from the crypto world that I'm not an expert on, and not shocking anyone, I've never invested anything there, and I will probably never. But if I come, so really for, I would say, my world, which is the world of corporates, institutional, they're interested into the new technology that is offered, but at the moment they're in a testing mood, and the demand comes mostly from corporates. And mostly from, I would say, short-term instruments, because that's where, indeed, you can see the immediate benefits potentially materializing. So all the ones that you mentioned, 24 hours, I would say, immediate access, fractionalization, et cetera, et cetera. But what I think is important to understand is that, first, to go there, and I totally agree with what has been said, you need to have the underlyings that go on-chain. Without that, basically, you're just replicating on-chain what is existing in the existing world at the moment. And this is going to happen progressively. This is also going to happen because I would say, regulatory authorities engage into that. There's a very big project, I would say, run by ECB and by Banque de France, which is called the Pythagore project, which is really to have all the short-term instruments being under tokenized format going forward, implicating, I would say, Euroclear, people like us, issuers, etc. So that's the condition. And then afterwards, even if all these benefits will realize, I think still some traditional mechanisms of traditional finance will continue to be there. Meaning, it's great to have potentially 24 hours access to trade or money market fund that is fully on-chain. At the same time, if you do it at a moment where there is no demand, but you will have a bid ask. Huh? So that will stay. This rule will stay. Second element, you need to have tools in place to ensure the liquidity and how do you manage these funds, even under vault formats, these kind of things. By definition, you will need to have the traditional elements also as well of risk management, liquidity, etc. in place. And some are being experienced in the US. So I'm not saying it's not possible. But I think it's important to remember that all these elements that we know are working in traditional finance will not vanish in this new world, and that will be also what I would say the authorities that ultimately are the safeguards from all the financial system to work will continue to function going forward. And I will take, for instance, one example. Potentially, I say potentially, theoretically, there are huge benefits for the whole industry in having the capacity to post on-chain collateral. For sure, for plenty of reasons. But at the end of the day, that shall not lead to a diminution of the total collateral within the system. Otherwise, it would mean that ultimately the system is probably less secure than it used to be. So I think that that's what we need to take into account going forward. That's why as well, make us move like, you refer to an animal that is particularly slow, a snail or a turtle, whatever, but I think we need to take into consideration that it's also because some fundamental elements of the existing financial system shall be made still there and working in a full on-chain financial system going forward.
Yeah, no, absolutely. I'm just thinking back, prior to Kaiko, I spent 20 plus years in JP Morgan. I mean, the financial system is, we're not rebuilding from scratch. This is the integration of technology and blockchain and tokenization. Exactly. Then before we wrap up, Dovile and Krisan, thoughts on the future of tokenized funds for the next 2-5 years and other insights for the space?
I think most of it's already been covered to a certain degree. I think there's still a lot of challenges, and I think an important point was raised. The term tokenized or tokenization, shall we say, is a quite, shall we say, sexy term. It gets used almost anything, like I can tokenize a painting, I can tokenize this table, etc., and suddenly I'm rich. Right, I tokenize this, I sell it, and boom, I'm rich. I think it goes to the point, what's the real case use, right? This all becomes proof of concept. It's great. We advertise it. We share it on LinkedIn, whatever. I've tokenized this, whoopie-doo. But in the end, where's the real demand? That's where it goes down. Where's the actual money flow going to end on this? I'd still go back to the original point. You have to look at financial markets. You have to look at trading desks. That's where cash is. Can we improve upon that? There's no point just doing tokenization for the sake of it, because it's just the road to nowhere on that side.
And my strong view is that now we have two worlds. We have traditional world, where most of us sit, and we also have purely on-chain world. There you have individuals who have a lot of money and interest to invest, but have never accessed the traditional investments. So tokenized products provide them a bridge to equity investments, to fixed income investments, to commodity investments. But my overall message to all of you is, this is the future of finance that's being built on blockchains. We can't ignore this space, because this is happening and this will only grow over time. And for me, as digital asset research person, the key interest lies in which blockchains are being used the most for this activity, and which ones will benefit the most from stuff moving onto blockchains, from stuff being tokenized, and from more and more investors actually operating in that world and not looking to traditional investment wrappers.
Thanks for that. And then, Misha, concluding thoughts before we wrap up.
Well, like, we had a huge body of work ahead of us, like all of us, right? Well, like, it's a job for people who know what the crypto is and how to use it, like, to educate. Again, like, that's coming full circle, that like we need, like, some people are, well, somewhat dismissive of traditional finance, and they kind of feel like they're being invaded. I think that's goes against crypto nature. Crypto was always, and blockchain was always about, like, everyone is welcome in this temple, right? Like, that's why we have, like, really strange people going around the conferences, because the crypto was always welcoming and accepting. And I think that, like, we have two paths in front of us. Like, the first one I don't particularly like. It's where, again, like, traditional finance come, but, like, they only dip their fingers and, like, tokenize, issue yourself a empty warrant that, like, does not do anything, right? You can't exchange it, you can't use it as a collateral for lending on markets or otherwise. It's not integrated. It's kind of like they use blockchain as just straight up a database, right? But blockchains are actually execution environment as well, right? They're not just only for to store information. They to make this information executable, to make it, like, to create a logic on top of that. So yeah, like, the other way that I like way more, that, like, traditional finance uses, like, in the future uses blockchain rails and actually utilizes the programmatic nature of it. And in this case, like, but this case is impossible if we don't try and help and build the infrastructure. That's what we were doing, like, for the entire time. Just building infrastructure for people to, like, for institutions and other participants to feel comfortable enough to, like, actually trust the calculating nature of blockchain, not just accounting one.
No, absolutely. Thank you for that. And then, Jean-Jacques, you have the final words.
No, but thank you very much. Thanks a lot, because I learned a lot during the panel, and thanks to Omar for the invitation, and all the people in this room that I know and that are taking time to explain us things. I think I would, first I would agree with what has been said. We can tokenize anything. In French we say jetonisation, it's even worse than tokenization. I think if there's one call that I would add, and coming back to the title of the event, which is Agora. Agora is the nice thing, and because it's basically where the democracy was invented somehow, which is important at the moment in the world we're living, to come back to where democracy was invented, and no reference to anyone there, but I think that matters. I think for me what is a big call as well is that we see a lot of that innovation coming from the US, which is great. I think there is also a definitive need in Europe to build up some sovereign solutions I would say, associated to these questions, because it's also part of the European financial strategic autonomy agenda. And so there is a little call also for the European players to be there, be totally part of that change. And on our side, we'll try to do our best to be part of that movement with also our European eyes.
Thank you very much, and thank you everyone, all the panelists for coming, and thanks everyone here. Please, a round of applause for our panelists. Thank you.